So Dan, welcome.
Great to be here. Thanks everyone coming.
So it's still just 2023 last time I checked, but we're already looking ahead to 2024. And you have 5 predictions for us. I think we'd be remiss if we didn't start with the thing that everybody is talking about, and that's AI. You have a big prediction for that, don't you?
Yeah, I mean, look, in our opinion, and we've talked about it, AI for us is something that's covered tech since the 90s. It's as transformational of a theme as I believe since the internet, 1995. And I think a lot of times with something like this, it's easy to get into hype cycle. Is it crypto? Is it whatever metaverse? We believe this is different. I think it's the biggest transformational tech theme we've seen in 30 years.
What makes it different than something like the metaverse?
It comes down to spending. I mean, we believe next year it's going to be about 8 to 10% of IT budgets in terms of AI driven. I think what we saw with NVIDIA, the godfather of AI, Jensen, I think that's just the start in terms of what I view as just this massive tidal wave of spend. We believe about $1 trillion of spend next 7 to 8 years. And that's how we've handheld investors. It's about the second, third, fourth derivative of AI. And those that believe that it's just hype, I think they sit here 2-3 years from now looking at this as a 1995 moment, not in 1999, 2000. But I get it. I mean, look, bears have missed every transformational tech trend in the last 25 years. This will be no different, in my opinion.
And so this is, and going back to 99 and 2000, that's when I got my start. I was trading stocks, and then the bubble popped. And so when you look at this, why do you say this is not 99, 2000?
Yeah, the reason I say it's not 1999, 2000, it's because back then it was all about hype, what's coming out in the next 5, 10, 15 years. Valuations, and I saw it firsthand, were based off eyeballs, how many people were at a user conference, etc. This is different. This is as real of a spending trend as we've seen. And to us, it starts with NVIDIA. Next is going to be software, the use cases, the platform names. And I believe this is, in our opinion, it's the start of a new tech bull market. And I think as we get into 1Q and 2Q of next year, that's where this all starts to inflect, in my opinion, as I think that the doubters, the naysayers, will be proved wrong, yet again.
And so let's go to your second prediction, because I think this goes into that nicely, is that we're actually going to get some really nice returns from tech next year.
Yeah, I mean, it's our view, tech. We sit here a year from now, I believe tech stocks are up 20%. Now, okay, to the pundits, like, well, valuations, how are you going to pay for that? Well, I view that the growth over the next 12 to 18 months is not being factored into street numbers. I think street numbers for 24 underestimate where growth is going to be anywhere from 10 to 15%. I also believe that when it comes to so much money that's on the sidelines right now, I think from an institutional perspective of retail, I think as we see numbers start to inflect over the next 6 to 9 months, I think a lot of these stocks rip higher. And it comes down to, I know 2 things. We're in Huntington Beach right now, and Fed's going to cut rates next year. And it comes down to, now I get all the tough talk from the Fed at different sort of steak restaurants, in random cities. They're going to cut white flags up. That's a risk-on environment, which is why, in my opinion, this is the start of a new tech bull market that has just begun.
And so you said that NVIDIA is sort of at the forefront of it. Who are the next companies, the software companies that you were thinking of when you're thinking about the winners from AI?
Sure, of course, the godfather of AI, the Don Corleone of AI, NVIDIA, and Jensen. I mean, that's where it obviously started. You look what's happened with Redmond in terms of Microsoft. I mean, we believe from what we hear from partners, for every $100 of cloud spend the last 5 or 6 years, there's going to be $35 to $40 incremental of AI spend with Microsoft. That's why right now Nadella is sitting there at top of the mountain. And I think, but you're going to start to now see what's happened with Jazzy and AWS. They're going to start to benefit. I think that's a big part to the sum of the parts thesis on Amazon. And you look what Google's doing. I mean, I'd argue that Google right now is probably one of the most undervalued large cap names because of the GCP, the Google Cloud piece, as that re-rates, that's going to be a huge piece to what I view as Google potentially, outside of Apple, outperforming every other large cap tech over the next year.
So you mentioned Apple. We don't usually hear their name when it comes to AI. Are they part of this AI trade as well?
I mean, we've talked about, I believe with Apple and Cook, they play chess, others play checkers. And I think AI is going to be no different. We believe in 2025 is when the AI App Store comes out for Apple. I think it starts right now with a separate form factor, as we see with Vision Pro for developers. Next is going to be the AI App Store that we believe will get announced next year for 2025. It's all part of the services business at Apple. That's been a big part of the re-rating. Look, I think how many have missed so many of these names. They sit there with their spreadsheets and their black shoals in their office buildings, and they're like, it's expensive based on my analysis. For someone like myself that travels the world, we see the inflection out there. And I believe AI, it's a 1995 moment, biggest transformation we've seen in 30 years. And Apple, that's going to be another piece to the services business that we don't believe is getting factored into the story. But even as we've seen over the last year, Apple's a name many just continue to doubt. They hate it at 500 billion. $1 trillion, you're insane. $1.5 trillion, you're drinking something. $2 trillion, that is unbelievable. $3 trillion, we believe it's $4 trillion by 2025. When you layer on the AI story and the sum of the parts thesis, that's now started to happen with NVIDIA. That's essentially what's happened with Jensen and NVIDIA.
And it doesn't worry you that Apple has gone from, 9 times earnings 10 years ago to close to 30 now?
I think if you sit there and you focus on 1 year PE, you've missed every transformational growth name in the last 20 years. We believe with the transformational special stories, you have to look out 3 to 5 years. What's the growth? What do cash flows look like? What's the sum of the parts? And I believe when I look at Apple, that's not the correct way to view it. I believe you have to view it on a sum of the parts with the services business we believe worth 1.4 to 1.5 trillion. And even as we go into iPhone 15 with the launch tomorrow, and we'll be here with Scott and CNBC, this is just the start of what I view as the super cycle continuing. 25% of the install base has not upgraded their iPhone in 4 years. Services is 20% penetrated. The China story, while many continue to kind of paint the bearish picture, the black swan event, which we've seen come out literally for the last decade, every 12 to 18 months, this is no different. We believe iPhones in China at maximum 500,000 in terms of what could be impacted. We believe 45 million iPhones that will be sold in China over the next year.
All right. So let's go to prediction number 3. I don't like to talk politics most of the time, but this year has been a really tough one for M&A because of politics. And you think we're going to see M&A return next year?
Look, I think right now, like when you get a parakeet, you clip the wings so that it doesn't fly a lot? Linda Khan and the FCC, that's what that's like right now. The black eyes from Khan and the FCC, we could spend a few hours talking about it. And so I think big tech right now flexing the muscles in terms of M&A. I think the Activision situation was significant in terms of from an antitrust perspective. I think you're going to continue to see Google, Amazon, and others fight. We believe M&A, it's going to be a bonanza for M&A. I think first off, valuation, especially for a lot of these public companies, it's going to really command a conversation of the boards to really understand what they could get. I think strategically and financially, you have about $1.5 trillion dry powder. So I believe over the next year, we're going to see just a massive amount of M&A, and big tech is going to be players in that. I think software is probably the biggest area. When I look like cybersecurity, names like Tenable, Qualys, Rapid7 are good examples. Varonis is another. I think a lot of these small, mid-cap software names, when they get the calls, I think they're going to have to answer them now.
And you think that the big tech companies that want to buy them, they're going to be able to get them through that regulatory process?
Well, I think big tech, it goes back to like the FCC everything we've seen, they have shown again and again that they're going to lose again and again, regardless of what court, what district, what Fed. And what that's done, the reason Microsoft with Activision is so important, that was basically Microsoft for all of big tech. More or less, what I believe now is going to be yellow brick road to much more M&A from big tech. Now look, strategically, when you look at AI, you look at cybersecurity, you look what's happening in this chips arms race, it's going to be so much more important for big tech. They're going to expand. And they're not, whether it's Zuckerberg or Jassy or Cook, they're no longer going to sit there and worry about the 202 area code calling. Because again, it's been a black eye for Con and FCC.
Now, this next prediction, I really want to hear you explain, because I have a tough time imagining it. You predict, let me make sure I got this right here, Apple is going to buy ESPN. Why the heck would they want to do that?
Well, I think it's a matter of when, not if. That Apple, now to those, Apple, the biggest acquisition they've ever done is Beats, $3.4 billion, not M&A, that's not the DNA of Cupertino. I think this is different, because I think what we're now starting to see, live sports, that's the golden goose. And I think you see it again and again. I think Apple specifically saw it with MLS, and obviously with the Messi situation, that's really been something that's gotten eyeballs on streaming, on Apple TV. They recognize there's a window of opportunity for live sports. ESPN's the golden goose. I think with Iger and Disney, more and more, they're going to have to strategically look at this asset. Now, we've said, at a minimum, potentially a strategic partnership. We've also, now you see Amazon trying to get into that mix as well. ESPN, they will be ultimately at the altar. It's a matter of who's next to it. We believe it's Apple. I think a year from now, Apple owns ESPN. Now again, FCC, they'll have their lawyers within 3 seconds. We get it. But that is really, from a live sports perspective, the one asset that I believe Tim Cook and Cupertino recognize is so unique, they have to have. And I believe it potentially is on the table, given the strategic process at Disney.
Yeah, it does seem like ESPN is a harder sell for Disney now. It doesn't fit quite as nicely as it used to.
It doesn't. I think even if anyone that listened to that conference call, if Iger has a lot of kids within Disney and within the different units, ESPN felt like the one kind of living in the garage. And I think that really shows, is just the start of what I believe is ultimately going to be Apple owning ESPN because of live sports content. And I think that, even as we've seen with the Charter situation, that is where it's all going. Streaming more and more is going to be owning live content. And here, when it comes to ESPN, that continues to be the core asset.
All right. Let's go to the last prediction. You already said that Apple is going to be $4 trillion in 2025, but you believe Microsoft gets to $3 trillion in 2024.
Yeah, because it's about the AI story. See, right now with Microsoft, if you're at Thanksgiving dinner, the standard uncle, oh, I would never buy that. It's trading at 40 times P. I get the historical. I view Microsoft from a sum of the parts. The AI story has not been priced in. So as the AI story starts to get priced in, we believe cloud, they're going to be able to monetize that 35 to 40% more in terms of everything they've sold on Azure. And I think when I talk to partners right now from Microsoft, they're spending 70% of their time monetizing AI. Now, after the quarter, stock knee-jerk sold off because Nadella and obviously team kind of be like, okay, this is going to be a slower ramp. It's not going to be Jensen, NVIDIA. We never expected that. But as we get into 2024, that's where this is all going to inflect. And that's why when I look at Microsoft from a valuation, this is just the start of the re-rating of Microsoft, in my opinion, in terms of big tech. And what I love is institutionally, when I put out a bullish note on Microsoft, no matter what time, within 10 minutes, I have 15 the most negative emails there. How could you own it? But I love sentiment being negative because I believe it's just going to set up in the start of what I believe is a new tech bull market. Big cap tech is going to continue to lead us higher. and there's a lot of skepticism on AI. And I think we sit here a year from now and you actually see the inflection in growth that ultimately starts, not just with the Magnificent Seven, but in terms of the rest of software and chips. I believe for chips, this is the best thing that ever happened. I mean, ARM right now is not going public. It's not for AI. You look at what Lisa Su's doing at AMD. You look at Micron. I spent a lot of time in Asia, and I think it's really unlike anything I've seen in decades in terms of the amount of spend.
Okay. Do you think it can get to the point where, I mean, if you say you need to sell Apple right now, people tell you that you're crazy. Can Microsoft get to that point where it's just accepted that this is a stock you own?
I think Microsoft and Nadella continue to prove the doubters wrong. And ultimately, it's much more of a cloud AI story than just a traditional platform. And that hasn't been priced in yet. So as much as you could say 30 times P, look at the, that's not, in my opinion, the right way to view it. You have to look out the next 2-3 years, sum of the parts. That was always our thesis on Apple. It's always our thesis on Tesla, which I think is just now starting to get to some of the parts with Tesla. Tesla's a good example. It's a car company. No, it's a disruptive technology company. And now, superchargers, battery, and I ultimately believe, I know Jonas had a note out today, that I believe FSD, I could argue they're one of the best AI plays out there, which is why we continue to be super bullish on Musk and Tesla.
Yeah, that stock had a 6% move or something off that Adam Jonas upgrade today.
Because you view it, if you look at it like a car company, it's, in my opinion, it's just the wrong way to view it. It's disruptive tech. The technology within Tesla is really unique to anything in the auto industry. And even when you look at UAW strike probably Thursday night, look at what's happened in Detroit in terms of GM Ford. Now these plans could get pushed out. Who's the one sitting there with a champagne bottle with this UAW strike? It's Musk. It's Tesla. Because they have one hand tied behind their back in terms of the GM and the 313 area code.
Okay, well, I think we have a couple questions here. So the first, let's go with, are you excited for the ARM IPO?
I think the ARM IPO, clearly a major positive for SoftBank, especially after the last few years. But I think what the ARM IPO shows is that this AI arms race, this Game of Thrones, is just starting out. And you look at the ARM IPO, look at the investors in there, look at the potential growth. This is something where in a market where IPOs have basically been frozen for 2 years, extremely important not just for semis, but for the broader tech industry, as that appetite is now there in this market.
Okay, and we have another question. At this point, would you be allocating more to the Big Seven or to less profitable, smaller enterprise SaaS companies?
Yes, okay. I view it as first derivative, second, third, fourth. Now, clearly, look, a lot of the froth in this market, it's going to get, you'll be able to determine the real winners from the froth in terms of AI. Just because you say AI on a conference call 40 times doesn't make you an AI player. But I believe now the next phase of this is going to be software semis. And that's why, to me, that's what's going to lead us higher. I think semis are going to rip higher the rest of the year. Inventory is now all getting worked out in terms of what we see coming out of Asia. Normalization. I think software, you look at names like MongoDB, Snowflake, the Messi of AI, Palantir, as a pure play. I think that's one that continues to there. And then you look at names like Salesforce.com, Oracle, traditional names that now AI is going to give them the ability to further monetize their install base. And that, if I leave you with anything, it's that. It's that we get it, haters continue to hate. They hated Netflix, Tesla, Microsoft, continue. But this is a revolutionary time in tech. I believe it's the start of a new tech bull market. And I think AI, it's a 1995 moment, not a 1999, 2000 moment. And that's something that I think is extremely important because we see it firsthand. And I think in 1Q, 2Q, 24, that's where you get the earnings season, where you see this inflect. And the bears go back into their caves, into hibernation mode.
All right. Well, Dan, interesting as always. Thank you so much.
Thanks, everyone.
Thanks, everyone.